2019 has been a very difficult year from an economic perspective. Therefore, many people wonder whether 2020 will become a better year. If you look at sentiment indicators today, we actually see quite hopeful signals. Sentiment indicators are bottoming out. So basically it means that business leaders are indicating that they expect that the economic future will be brighter than the economic situation today. And that's obviously a hopeful message. International markets are actually reacting to this, and we see in particular equity markets being quite optimistic about the future. And also long-term interest rates are increasing, which basically signals that markets believe that the economic situation and the economic outlook will improve in the period ahead. If you look at third quarter figures, actually they confirm this positive tendency. For example, if you look at US figures, growth in the US economy remained stable in the third quarter compared to the second quarter and stabilized at 0.5% of growth on a quarterly basis. That's quite good actually if we still take into account that the US economy is at the end of its business cycle, and in particular we see that the US labor market is performing very strongly. There's quite some job creation on a monthly basis, and moreover wages are increasing. And this combination is actually supporting consumption in the US economy, which is still the main driving force behind US economic growth. Also in the euro area, the third quarter was quite okay. Growth stabilized again at 0.2%. Obviously, that's less than half of US growth, but nevertheless, it's a quite good performance. Nevertheless, we still see quite substantial economic differences between the different European countries. Now, most surprising was the relatively good performance of the German economy in the third quarter. Many observers were expecting a negative growth figure for the German economy in the third quarter, but actually the figure was positive, slightly positive. And by having a positive growth figure in the third quarter, we avoided a recession, technically speaking, in Germany. And that's obviously good news for Germany, but not only for Germany, it's good news for the entire European economy. Finally, in China, we see that things are slowing down further. Industrial production is declining, and in particular, export and imports are under pressure. And that's obviously not a surprise given the international trade war that's still going on. So, as a whole, basically, if you are looking at the global economy, we see that things are stabilizing, and actually we see optimistic signals which may lead to some economic improvement in 2020. So it's a good start of the new year. If we focus in particular on risk factors, there's one risk factor which is standing out for 2020, and that's the trade war. But the trade war is becoming a more complex and multi-dimensional issue. So far, it was only the US-China trade conflict that really played a role and was affecting the economic outlook, but today there are many other factors. As far as the US-China trade conflict is concerned, there are negotiations ongoing between the US and China, and hopefully these negotiations will lead to a trade deal, so-called Phase 1 trade deal. This trade deal would just consist of some limited concessions by both parties, but at least they will stabilize the situation and avoid that we get a further escalation of this trade conflict. Obviously, in the longer run, there are still major issues that the US and China have to discuss, and ultimately a solution will take many more years. But there are other front lines in the trade war. For example, there's a new front line which was opened by the Trump administration towards South America, because South American countries are still quite active in the steel sector, and the Trump administration is basically accusing them of using all kinds of protectionist measures to harm US economic interests. So the US is threatening to impose higher tariffs on steel products from Latin American countries, in particular from Brazil and Argentina. Another trade front is between the US and Europe. The French government decided to introduce a Digi-Tax, which is basically a tax on technological companies. And obviously American companies like Google and Facebook and so on may be affected by this new taxation. Therefore, the US government is not happy with the situation and again is threatening to impose tariffs on French products like French champagne, French cheese and so on, which is obviously bad news for the French economy, but also for the European economy as a whole. There is a risk that the European Commission will react to these American measures, and if they decide to do so, we get an escalation in a US-European trade war, and that would obviously be a major problem for the global economy. So to summarize, we can say actually that the economic outlook is brighter than a couple of months ago, and we are quite optimistic about the economic evolutions for 2020. Nevertheless, we are remaining very cautious because there are many risk factors around, and some of these risk factors can harm the economic outlook very substantially. Nevertheless, for the time being, we remain relatively optimistic about the near future.